Welcome to this episode of Personal Finance Podcast. In these podcast series, we always focus more on investor management rather than investment management. Our aim is to try and understand our investment behavior, our biases, what we can control, and what we need to learn beyond this daily news and headlines we are exposed to 24 by 7. So, what is today's story? Today's story is a story about my friend and I. A friend of mine recently was reading his ET Wealth newspaper and he sent a clipping of a chart to me. What followed, our discussion after that, changed how he looked at investing. And maybe, just maybe, this podcast will do the same for you. The newspaper clipping that caught his attention showcased the recent performance of few PMS investments, portfolio management services. I think we all know about this. One investment in particular had delivered an outstanding return over the last year. It looked impressive. It seemed like the kind of thing anyone would want to invest in. And he was wondering, I guess, that was he missing out on something big? Naturally, he was curious and he sent the article to me and asked, what did I think about it? Well, my response perhaps surprised him because I didn't get excited, I didn't get defensive, I didn't jump to agree or disagree with him. Instead, I asked him a simple question. Do you know how this fund was performing 1 year ago? He had no idea. This fund a year ago was one of the worst performers, I told him. If I had recommended it to you back then, a year back, when it was struggling, would you have been comfortable investing? He thought about it, and honestly, he said he wouldn't have. He would have called it a dud. He would have wondered why I was recommending a loser. But now, with 1 good year of performance, he was seeing it with completely different eyes. And that's when it hit him. Nothing had changed except his perception of the fund. The fund was still the same. The manager was still the same. The strategy of the fund was still the same. Only the recent numbers were different. And yet, that difference was enough to sway his emotions and his thoughts about it. Because that's what happens with investing. We often chase the rear view mirror. We see what has worked recently and assume that it will keep working in the future. We get excited by charts, by rankings, by headlines. But we forget one important truth. Past performance is not the future. Everyone knows this line. It is printed in bold under every financial ad. But living it, believing it, acting on it, well, that's a different ballgame altogether. Because, deep down we are emotional creatures. When something is going up, it feels safe. When something is going down, it feels risky. Even though the fundamentals haven't changed, it still feels risky. This is why investing based purely on past returns can be very dangerous. When you chase yesterday's winners, you're buying yesterday's story, not tomorrow's reality. So the real question isn't what performed well last year or this year. The real question is what strategy gives me the best chance of achieving my goals over the next 10 years, 15 years, 20 years. When I explained this to my friend, it made him pause. It made him realize that good investing isn't about chasing performance. It's about building a thoughtful, goal-based strategy. It's about sticking to a process defined for you, even when it feels boring. It's about understanding that every good strategy will go through bad periods. If you abandon your plan every time something else looks better, you're not investing, you're just reacting. You're moving, yes, but you're not progressing because motion is not the same as direction. We aren't just investing to change returns, are we? We are all investing to build a life. I believe that end of day, when we think of investments, the core of every investment decision, there is only one common desire we all have: to smartly invest our hard-earned money so we can take care of our dreams and responsibilities and lead a stress-free life. We aren't investing to outperform some index. We are investing to secure our future, to fund our dreams and protect our family for a peace of mind. And when you start seeing it this way, the whole game changes. Suddenly, it's not about finding the hottest fund. It's about finding the right guide, the right philosophy, the right plan. It's about patience, not panic. It's about discipline, not drama. Of course, there will always be temptations. There will always be articles showcasing the latest top performer. There will always be a voice in your head saying, maybe I should switch. But the real investor, the one who wins over time, is the one who learns to stay grounded. The one who understands that wealth is built not by chasing excitement, but by embracing consistency. Today, let's start looking at our investments in this way, a little differently. Don't ask which fund made the most money last year. Instead, ask, is my plan on track? Am I closer to my goals? Am I building the future I truly want? That shift in thinking is priceless. Because when you focus on the purpose, performance eventually follows. Yes, it won't follow in a straight line. It won't be without discomfort, but with patience, it does follow. If you're an investor like any of us who gets excited by headlines or new fund rankings, please pause. Don't let this noise around you distract you from your real investment journey. Focus on your goals and build a plan that honors them. That's where the true wealth is born. Not from headlines, not from excitement, but from wisdom. And the sooner you see that, the sooner you will find peace. And that peace, believe me, is worth more than any short-term returns. Sending that article to me wasn't wrong on the part of my friend. It wasn't even foolish. It didn't mean that my friend didn't have direction. But now the good thing is he sees the bigger picture. And if you do too now, for that, I'll be grateful. Thank you for listening in. Hope this helps. God bless.